Hey now, I'm back with another trading system that is specifically designed for new traders due to its simplicity and profitability. This trading strategy is the perfect jumping off point and can serve as the foundation to an even more complex and more profitable trading system. Just make sure you're subscribed or your next entry will wind up like this. This video is brought to you by the best broker in the world, Henko Trade. I just got in and out of an Aussie USD scalp and the spread was almost nothing. And I have seen their spreads go all the way down to absolute nothing. And if you live in the United States like me and you believe in freedom, then you need to be on Henko Trade for the freedom to use 500 times leverage, for the freedom to trade CFDs, for the freedom from KYC. And if you like free money to trade with, then use my link for a deposit match of up to $25K. If none of that appeals to you, go seek immediate help. I call this system 4 lines to profit. And like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes one free TradingView indicator. As always, links and settings to the indicator is listed in the description. The only study to place on the chart is the 4 EMAs by Herblock. EMA 1 through 4 will be set in order to 25, 50, 100, and 200. The colors in order will be pink, aqua, orange, and white. The Exponential Moving Average, otherwise known as the EMA, is probably the most common study traders use. The EMA gauges the trend direction of any instrument. In 4 lines to profit, the EMAs will provide the precondition for setups, stop loss levels, and entry triggers. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is the Aussie dollar versus the US dollar. This test will be done on 4-hour candles because for most new traders, they can only look at the charts once or twice per day. But it certainly can be used on lower time frames. More on that later. The rules to enter along on 4 lines to profit are: first, the EMAs are spread out in order. The 200 at the bottom in white. Above the 200 is the 100 in orange. Above the 100 is the 50 in aqua, and the top EMA is the 25 in pink. Second, price trades above the 25 EMA for at least 8 candle closes. Then price closes below the 25 EMA. If price closes below the 100 EMA in orange, the setup is canceled. Enter when price moves back above the 25 EMA in pink. Our rules are met when this candle closes. That is our trigger candle. We place our stop at the 50 EMA in aqua and target 2 times risk. And long example 1 hits the profit target. If you enjoy this content, make sure to click that like button. I have one more long example. The 4 EMAs are lined up in numerical order, lowest on top to the highest on the bottom. Price traded above the 25 EMA for at least 8 candles. The market pulls back and closes below the 25 EMA. Price never closed below the 100 EMA during the pullback. Price then closes back above the 25 EMA in pink. Everything converges on this candle and it serves as our trigger. The stop is placed at the 50 EMA and the target is 1 to 2. And long example 2 rapidly hits the target. Now we flip to shorts. This is what I will test for shorts. First, the EMAs are spread out in order. The 200 at the top, below the 200 is the 100 in orange, below that is the 50 in aqua, and the bottom EMA is the 25 in pink. Second, price must trade under the 25 EMA for at least 8 candle closes. Third, price must close above the 25 EMA. Cancel the setup if the candle closes above the 100 EMA in orange. Finally, price moves back below the 25 EMA in pink and closes. All of that happens on this candle here. That is our trigger candle. The stop is placed at the 50 EMA in aqua and target 2 times risk. And short example 1 eventually hits the profit target after giving 2 more signals, which turned out to be 1 loss and 1 winner. I'm going to show you one more quick short example. The 4 EMAs are fanned out in order. Price is trading below the pink line for well over 8 candles. Price closes back above the 25 and in fact has a strong reaction to the 50 EMA. And then we get a close just below the 25 EMA. This is our trigger candle. The stop is placed at the 50 EMA and the target is 2 times risk. And short example 2 rides the pink line to a rapid profit. I'm going to give you some fantastic ideas on how we can improve this system along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, spread the word and hit the like button. If you are thinking of using this system, please do extensive back and forward testing and be sure to let our community know what you discover. This test was done with the Trader's Landing automated script. Using 4-hour candles and only looking at the Aussie USD chart, it took 12.5 years to find the 165 setups. The win rate was in the low 40s and the profit factor was a respectable 1.5. The drawdown was small at 7.66 and the total gain on account came in at 34%. This is just the beginning and there is a lot of headroom for improvement, so stay with me now. The equity curve actually starts in the drawdown but then looks like an unstoppable force. What I like here, especially for new traders, there is no period of extended drawdown. I give this system a Trader's Landing score of 7 because it is simple with clearly defined rules. Is a great base to start adding other conditions and indicators to, but you cannot just blindly run this system as tested for the best results. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. First, many new traders think they can just buy some bot or script and run it blindly. These market participants do not last long. When price is consolidating like this, do not take any trades. Look for when the market is in a clear trend with easy to read market structure. The only trading bot I know you can run blindly and make consistent profits would be EasyBot, which is free by the way. I discuss both market structure and EasyBot in our community every day. Second, I find that hidden divergence on an oscillator can create powerful signals which will portend a trend continuation. It would be the first thing I would add to this particular system. Third, some of the other methods you can use, which are also options in the automated script, are using a trailing EMA as a take profit method, changing the stop level to an ATR multiple of the trigger candle. Or if you are doing some quick scalp, setting a fixed candle number as your take profit can get you in and out of many quick trades, especially on strongly trending markets. Fourth, the best way to set your entry and stop levels are waiting to get in after a break of the market structure and setting stops at areas of invalidation. When you get more experience, waiting for a pullback after a break will give you the most profitable setups. Fifth, the market is going to trade under different phases of market conditions, and you must make a determination if you should modify the EMAs to match those conditions. The settings for this instrument are probably not the right settings for cable, or if a particular chart is moving impulsively, then lowering the numbers on the EMAs would provide many more entries with much more profit. Additionally, if you see clear bullish market structure, but your EMAs are not lined up, head down to the lower time frames. Chances are that your top-down analysis will yield huge results on the lower time frames going with the higher time frame trend. If you want to talk to me and interact with our community, in addition to supporting the work I am doing here, you can do so for free by registering for our Circle community. And those who pick up a premium or elite membership will have access to the discussion and education spaces in addition to the TradingView automated scripts and a private video on my own personal trading system. Thanks for watching and have a great day, because you deserve it.